So there's localized increase of the volume right here for the past 3 sessions. Okay, and if we look at the candle spread, the size of the candle is quite big. Okay, so this is relatively big candle. So especially yesterday candle, and also that is on Thursday. So Thursday candle is also relatively big. Another thing to watch out for is there's a gap. So we talked about this gap last week. So the gap has been filled on this bar. So Monday's bar filled the gap and have an attempt to rally and attempt to come in above 7,000, but there seems like some more profit taking activity. And also look at the volume. It's not aggressive. I don't really see aggressive demand come in to initiate a breakout above 7,000, but same as the supply level, despite we are getting 2 bars. Okay, so these few bars increasing of the localized supply level, but what do we have here in terms of the results to the downside? So look at this 2 candle, bearish candle, black candle, but there is a demand tail show up. So here is a demand tail, high close. There's another demand tail, high close, and look at where the demand tail show up is right at this zone. So this is the previous gap zone. So the gap provided as a support. So means that buyers actually rush in whenever there's a test and there's a dip. And yesterday there is even a dip below, break below this bar. So that's quite significant, but that's really just happened intraday. I think it's during the European London session. Let me just go to the hourly time frame. Yep, that is the non-regular trading hours. So about afternoon 12, 1, 2, 3 p.m. So when European London session open, there's a rally coming, pause, flagging, keep rallying up, and during the US Open session, there is a strong rally. Okay, so strong rally up from here. So basically just an intraday overdip of the previous swing low level, and followed by a strong rally, flagging, and during the US Open market session, and it just keep charging up until it hit the previous selling zone. So this is where the original selling begin. So look at the big spread bearish bar. So it makes sense for the price to pause right there, and until it triggers some supply, some sell off. So something like this, increasing of the supply and then break down. Otherwise, it's likely going to go up from here, because at this point, even it's right at this resistance level, resistance zone, we did not see a huge supply come in or any sell off trigger. Okay, so still very constructive, and we could just let me just go to the daily. Okay, so let's look at the daily. 6,900 is still a decent level. So it has been tested a few times, at least as shown up in this bar. So this is where the demand come in, where the demand come in, another demand come in. So despite the attempt to push a price down, demand actually shown up right at about the 6,900 level, and also shown up as the gap filled up level. So filled up by this candle, Monday candle. So looking good. Under the worst case is there is suddenly increase of the volatility because of news, then it just keep fluctuating, breaking down, and as long as this zone is not violated, the 6800 to about 6760 is still relatively bullish. So it means that the S&P 500 has the right to to just do a pullback or retrace all the way back to about 6800 and still did not violate the structure, and it still can bounce up to build up another level, another structure, another accumulation before it rally up. But so far, based on just the price action for the last few weeks, it seems like demand actually come in at least at this level 6900. So this gap down day is huge, meaningful, but get a reversal bar immediately on Wednesday. So Tuesday, Wednesday, this is like a shakeout, and followed by this bar breaking out, filling up the gap, and also these few bars, the three bars here, shown out as a test bar, tested the zone again. So this zone somewhere close to 6900 is proven as the demand zone. That's where the demand show up, and hopefully we wouldn't need to wait for longer time before we see another breakout above 7000. So far 7000 level is a resistance level, and you can call it a psychological level, round number, but there isn't much supply just coming off this 7000 level. So look at all this candle, small candle attempt to break out. It's just lack of the aggressive demand, or even lack of some catalyst, some good news. It could be driven by the earnings, or even some I don't know, some policy or some of the guidance from the Fed. But so far is a lagging of the demand for the S&P 500 to push over and come in above the 7000 level. And whenever it dipped to about 6900, demand show up. So there's demand shown up right at this level. So this is still a relatively constructive and bullish sign. And if we look at the very long-term trend, this is still very well established uptrend. So strong uptrend and getting a bit choppy, some consolidation, the trading range. So overall, that's still a very bullish structure. So supply has been decreasing throughout. Okay, from here, so from high volatility, slightly better supply absorption, contraction of the volatility, suddenly increase or localized increase of the volatility, but look at the results is kind of muted. And another test bar, another attempt to push a price down, increasing of the volume, but shown up as a demand tail, higher low throughout. That's good signs for the bull to continue. So Nikkei say, but S&P still have the demand. Yeah, oh, absolutely. So this is the thing, the key. The S&P 500 is still shown up as the demand tail, tested the zone and failed to commit below. And if you just look at a few signs. So first, this bar, the gap down bar, actually shows the commitment and shows the intent with increasing of the supply. So that came with the news. There's the geopolitical tension, the tariff possibility between the Europe and the US, but suddenly get a reversal bar next day. So this two bar become very important. So as long as it's holding up and did not violate this zone, if you want to be precise, then probably that will be the zone. So as long as it did not violate the zone from 60, let me see, so from about 6820 to about 6920. So that is a zone that's it need to hold. So we do not want to see suddenly the price just dip within the zone and then show the very weak rally, inability to rally up, and then eventually just fail, break down. So that's not a good sign. So this is the thing that we need to pay close attention to. All right, so in short, in terms of the short-term swing is up, because for the past few sessions, we got some demand tail shown up, and it's likely to have another attempt to break above 7,000. We need to see and monitor how strong is the demand and whether it could just hold up the gain before it breaks out, or it could have some increasing of the volume, something like this kind of the volume, or even this kind of the volume, to just push through and come in above 7,000 to kickstart the uptrend. So otherwise, it could still have a prolonged trading range. So that is the trading range between 68.40 to about 7,000. So the trading range shown up here is still, well, it's still valid. Let's see whether it could just contract further, tighten the price a bit before the breakout.